conversations. And on earnings, we have the management of Zaggle joining us on the show. We have Mr. Avinash Godkhindi, the MD and CEO at Zaggle. Avinash, hi, morning. Good to be speaking with you again. Talk to us about how Q3 has shaped up for you. It's a very strong top-line growth coming in yet again for your company. You've grown at about 21% on a sequential basis. Talk to us about what worked out, and on the flip side, your profitability growth has been slightly muted. So talk to us about what has trickled down from the top line to the bottom line that has led to a little bit of a convergence in the numbers.
Good morning, and thank you for having me on the show. We are very thrilled with our Q3 numbers, and actually, if you look at in 9 months, we've already exceeded the last year's PAT, while we've gone a little lower than the 12-month revenue number. So actually, the growth in PAT is and EBITDA is much faster than revenue. Now, we don't control the street expectations, but performance-wise, numbers-wise, mathematics-wise, it's been phenomenal.
Right. Avinash, I wonder what you make of everything that's playing out in the global marketplace with regard to AI, right? At least the pessimism is very, very evident for companies like you, and the impact of that on companies like you. What's your sense at a ground level? Do you believe you can get replaced or displaced by AI at all?
No, we actually, Harsh, we are one thing which we possibly haven't done a better job, we need to do, of explaining that we are a SaaS FinTech. We are not a pure play SaaS company. If you look at our monetization, out of the last year's numbers of about 1,303 crores, 35 crores came out of SaaS, right? So you do the math, 35 divided by 1,303, how much is coming from, the software side? A lot of the monetization is on transaction, and the software piece really is something which helps us get a lot of stickiness. Now, we are using AI in a very big way to accelerate our deployments, our development. And it's great for us. It's reduced our manpower costs significantly, which shows in the numbers. It accelerates our go lives. And if companies really want these solutions to be fully integrated with their ERP, with their payment systems, you still obviously need a partner like Zaggle. So we are very chuffed with what is happening on the AI side. We're neither an IT services company, which we've been taking pains to explain to the street, nor are we a legacy software company, nor are we a pure play SaaS company. So with so much monetization coming through transactions, and we leveraging AI in a very big way, we are very thrilled and excited about what lies ahead for us. This allows us to expand into a lot more markets and a lot more spaces very rapidly.
You spoke about the SaaS part of your business, the software fees part, but it's also program fees that have done very well this time. Talk to us about what is the balance going to be going ahead? Where is the mix going to be tilting towards? Is it going to be more towards the software and the SaaS side? Is it going to be towards program fees? And which segment is growing faster?
See, it's always historically been the program fees. It continues to be program fees because a lot of our monetization happens through transactions. Just if you look at the breakup this quarter as well, out of the 497 crores, 11.2 crores, about 12 crores is software, right? So as a percentage, it is 12 divided by 500, give or take, right? So that's quite small. As we go into global markets, it's going to grow for sure. But program fees is a place where we see tremendous traction, tremendous acceleration. SaaS income in the years has grown steadily for us, and that's an area that we are focused on. But that's not the sole basis of the business.
Right, Avinash, give us a sense or a pulse with regard to margins. You've the aspiration is to get margins to get better. Margins have been under a bit of pressure. You're likely looking at now nearly doubling margins from here. Have we bottomed? That's point number one. And what's playing out? Give us a sense.
The margins have expanded. Margins have expanded consistently through this year and compared to last year. We are at about 10.3 now. Last quarter was about 10.1. This is EBITDA that I'm talking of, adjusted EBITDA, and our adjustment is only around ESOP costs. So ESOP costs have also come down. So margins have expanded. Margins have expanded exactly as per our guidance, where we had told this year we are going to come somewhere in the middle of 10 to 11%. And we are on guidance. So, and overall, we've said that in about 5 years, we'll be at about 14-15% EBITDA margin, and we are on track for that. So I really don't understand or see why would you say that margins are under pressure. Margins have continued to expand. That's what the numbers say.
Avinash, that's my error. I looked at the EBIT number rather than the EBITDA. So yes, your margins have expanded, and I remember your guidance to be 15%, and hence I asked you as to what's gone wrong. Okay, I get your point.
15% over 5 years.
Yeah,
just
sure.
Let me clarify.
Sure.
Right?
And it won't be linear, right? Because, I mean, we've had conversations on this in the past where you've said it won't be linear.
Cannot be.
Right. You're still in the growth phase. And in terms of your top line growth, you've guided for 40%, but you are likely to exceed that. By how much do you exceed that? And on that base, what should the FY27 aspiration be on a steady state basis? Of course, the new wins keep adding to your top line, but on a steady state basis, give us the guidance.
See, wouldn't be able to say how much we'll exceed that 40% by. Right now, the tailwinds are very strong. So we hope to do very well in this quarter as well. Going forward as well, the other thing which I think we have not spoken enough, Harsh, and I want to take this opportunity to do that, is this is all India. This is all organic, right? So if I add, the overall revenue from our acquisitions and investments, that's already this quarter. It's not 497, it's 535 crores, right, including the other income. So there's a lot of margin, lot of revenue that is coming in from those investments and acquisitions, which right now in the conversation that we have with you and the street, we are not mentioning that. But obviously the console numbers show that, right? So there's growth on the acquisition and investment side, where some of them are doing spectacularly well, like Green Edge. Mobileware has done very well over the course of the 9 months, and others are picking up. Standalone basis as well, we see tremendous momentum in the business. So I wouldn't hazard a guess in terms of saying, hey, this is how much we are going to do in terms of growth next year. But our goal to get $1 billion revenue in 2032 stays, assuming the rupee and dollar stays reasonable. So 10,000 crores is where I sort of put it. And that is absolutely, we are in line with that as we speak.
Perfect. Yeah. Thank you so much, Avinash. It's been a pleasure speaking with you as always. And of course, congratulations on that.